Does the volume breakout trading strategy even work? Are the trading gurus actually furious sharing fake information? I have spent years trading the strategies out there before I found the right way to trade. I've created this channel to reveal the real performance of every strategy objectively with code. So you don't have to waste your precious time and hard-earned money like I did. Hi guys, this is Trader HC. I'm here to help you with your trading career and develop your own trading strategies. If you find this video helpful, consider subscribing to support the channel. In this video, I will backtest strategies systematically from 2015 to 2020, across 18 major currency pairs and the most active US stocks traded right now. We're the only channel that is testing strategies at scale, on different assets, multiple time frames, in recent years to keep the results relevant and being fully transparent with their actual performance. I believe this is how proper strategy testing should be done, and after finished watching the video, you will know what to expect from this trading strategy and have everything you need to implement the strategy we covered today. Testing systematically requires skills and statistics know how to implement the testing properly without bias. Some YouTubers may manually test a trading strategy 100 times, but this is considered inadequate as we don't know what assets did they trade, in which year they conducted their testing, involving loads of bias that makes the testing results unreliable. These can have a huge impact on the performance of a strategy, and without clear guidance, the information can be misleading and setting false expectations for traders. Only testing strategies objectively can produce meaningful and accurate results. As in this video can prove if you should risk your hard-earned money using this strategy. If you have any questions, or suggestions on topics you want me to cover in the coming videos, leave a comment below. For those who are new to trading, volume is an important confirmation indicator because it is used to measure the relative significance of any market move. If the market makes a large move during a given period, then the strength of that movement is considered more reliable if it's supported by a large volume. If the volume is low, then the move is viewed with less significance. But here is a big problem with this trading indicator: there isn't any evidence to support the volume indicator can give traders a statistical edge. And it is just a confirmation indicator, meaning we must combine volume with other trading indicators for trading signals. To be a profitable trader, as a beginner you should always trade in the same direction as the market is trending. So to identify the trend we are going to use the 50-period exponential moving average. If the market is above 50 EMA, it is considered as an uptrend. We also need to define how much volume is classified as significant. In my strategy, I defined when volume exceeds 2.5 times the average volume, it's considered significant and we should keep an eye on the price action closely. We buy when the price exceeds the price level that was set when the most recent volume spike occurred. The reason behind this is that if a price level was created by a large volume when the price breaking out this recently formed key price level, it might signal the direction of a coming significant price movement. Remember, we also only buy in the same direction as the primary trend, which is dictated by the 50 EMA. Here's an example of a buy setup. The market is above 50 EMA, so it's an uptrend. The key price levels confirmed by the recent volume spikes are plotted as the blue lines. In this buy setup, entry is at the price closed outside the key levels. The stop loss is 2.5 ATR in the opposite direction of the first candle close price outside the key levels. We'll trail our profit target with 2.5 ATR, that means when the price move against us by 2.5 ATR, we'll close our trade. In a sell setup, we simply do the opposite of the buy setup. Unfortunately, there are many trading YouTubers will show a hand-picked setup to earn the trust of the viewer to sell them a paid course. They won't show you what is the actual return, drawdown, and win rate of the strategy so you can manage your expectation and not blow up your account. I won't waste time on showing hand-picked trades, as it won't help anyone to validate the effectiveness of a strategy. Let's go on to test it on all major currency pairs and the most actively traded US stocks right now. Trading is a probability game. If you are not backtesting the strategy properly to gain a statistical edge, you'll have a tough time becoming profitable in trading. And that's why I'm here. The reason why I created this channel is to show you the real performance of any trading strategy without bias, so that you can develop an edge over the market. By knowing the past performance of a trading strategy, you can have a realistic expectation on the return, maximum losses, and the number of trades you'll get in any given period of time. You'll know which assets and time frame to trade in order to be profitable when trading a specific strategy. In the next few minutes, I will show you how profitable the strategy really is on the 18 major currency pairs and 52 most actively traded US stocks between 2015 to 2020, what is their winning percentage and what is the maximum losses during this period. Before recording this video, I've already tested this strategy and noticed it is most profitable when trading the daily time frame. Therefore we will be trading on the daily chart. We start with a capital of $1 million for the convenience of reading the metrics, but the performance applies the same and scale with any account size. To be realistic, we also need to set commission to 0.8% per trade to capture the cost of trading. Only strategies that are profitable after commissions are truly profitable. Change the time frame to daily chart and we are ready to go. In the next few minutes, I'll quickly skim through the non-profitable assets and focus on the assets that are profitable with the volume breakout strategy to save your time. Watch the video carefully as it can help you to understand how this strategy looks in different market conditions. Assets and timeframes have resulted totally different returns. Watch till the end to see the performance of the volume breakout strategy for every asset in our sample. The volume breakout strategy is a price action trading strategy that uses volume as a confirmation indicator to improve the success rate of a breakout. I can see the strategy performs better on stocks. It could due to stocks enters trends more often than currency pairs. In our testing, I observed that the number of closed trades from this strategy is low when compared with other strategies that I've tested so far. Generally speaking, this volume breakout strategy is a low-frequency trading strategy that is relatively safe to implement for swing traders. Savvy traders should consider extending the backtesting and optimize the parameters before trading the strategy on a real account. In future videos, I will be sharing how to perform backtesting and optimization correctly, so traders can minimize the problem of curve fitting, improve the robustness of their trading strategies that will greatly increase the chance of their trading strategies to continue working in the future. Subscribe to this channel to see more videos, hit the like button if you found this helpful. And I'll see you in the next video.